Hey, it's Mack with PriceActionTradingSystem.com. And it's Wednesday. It's February 1st, start of a new month. And this will be our chart lesson for the day. And we had a really good downtrend here early on. And this in the red circle. You need to, on FOMC day, I would be flat by about noon because otherwise you get hung up in here where nothing's happening and then you can get whipsawed. So you're usually better off to not trade after noon. And this is kind of about here, maybe a little before was when it was starting to settle down and be back to normal, I guess is what you would say. And this is typical of what happens. You get a big news related move, it almost always comes back and resets fairly quickly. Very rarely does it not. And so that's one thing to always keep in mind, and that's what it does today. It comes back, kind of resets, and then the uptrend starts back again. And really from 9:30 to close, this is just a range. And you can see this is very similar to yesterday. Even though we were trading down, we found a point where it became kind of a support resistance. And once we got through it, it became resistance. And that's what happened today. Once we got below this point, that price level was right here around 22.74 and a quarter. So that's kind of unique. That happened, is almost exactly like what happened yesterday. So, and that's the thing. The market will start doing something and it'll get pretty consistent at it for a week or two, or maybe longer, and then it changes and it'll do something else. And that's what happens to people. They they get locked in on doing something, and then they're totally thrown off or confused when it changes. Somebody asked me the other day, has the ES changed, over the last 15 years that you've been trading it? No, it's exactly the same, but it does go through these cycles, and it takes a long, long time to see and get used to all the different cycles, and they just kind of come and go. But the personality and overall, the ES has not changed one bit, in my opinion. But it does go through cycles where you see different. You may trend up for a long time, or trend down for a long time, or range for a few days, and that's what will happen. It'll start ranging, and just about the time you start to get it and get comfortable, then it'll start trending again, and you'll get thrown off. And so you got to learn all the different personalities of it, or different type things the market does, and then learn to recognize them and adjust real quick. And once you get that experience, it's not that difficult. But until you get experienced at it, it's pretty hard to do. And that's what really takes, not only learning this stuff and just getting experience trading. It takes time just to go through all the different cycles and get used to them. So anyway, I need to get through this pretty quick today. I've got something I have to do this evening, so I'm going to wrap this up pretty quickly, go through the trades. I wanted to notice there's two different channels. I've got this one going up, and then I got one that's a little flatter. Um, you could have drawn this either way, and I wanted to show you this. You still get to the same conclusion. The only difference is the steeper one, you do get a break and a couple of moves up before it reverses. The flatter one, which is the one I generally like to use, the closes more often, and you see it fits, but on it we got an overshoot. But once we reversed, we never got a retest attempt. So either one of them really gets you to the same place, but if you use the steeper one, you can see we get a clear break and a couple of legs up, and then it reverses. So and by using that one, you're really just starting at the low and using the first two swings. However, there's a lot of times I like to use those closes. That's generally where you'll find that trend line. And you can see that fits real nicely up there. And when you move it to the other side, it fits real nicely over there, with the exception of the overshoot. Let me get this other one off the way. It's kind of confusing. You get the overshoot, and then it moves up and reverses. So, but generally, when you get the overshoot, it's not long before you get a close outside. But also, I talked about this yesterday. A lot of times you can ignore an overshoot that late in the day, or I'm sorry, not that late in the day, but in that part of the day prior to the regular open. The market will do stranger things in the overnight because the volume is thinner and it's easier for people to move the market. You can get one big buy order that might push it up there, but you really may not ever be ready to reverse yet. So just keep that in mind. But let's get through the trades. I need to do this really quickly. Uh, First trade I saw was just prior to the open. Notice we made a little double bottom with a new low here, so you get a first entry short. You go up, you get that second entry short. So there's your failed second entry short, bouncing right off the trend line. It actually went lower first and turned and went up. Nice bullish bar. It's right into the high of the day, but it's obvious we're trending up here, and it's still pretty strong. And you got that trap right there. Most likely you're going to trap people. Plus, that's also a failed break. This is congestion across here, and that's a little failed break lower. And we've been trending up, so we're probably going to go higher. So I like that one. I don't think it's worth risking up here once you get into the open. It's really a repeat pattern, and sometimes you can't ignore those. It would have worked. I'll make it green, but I think you're better off to skip that one. But you can see it's just another little congestion, and I mean, it could have easily went up and made a double top and turned down on you. So if you could get in, once it broke above here, if you could get in another tick or so back, which I think you probably could have, then and you got room to scalp out before here, then I like it even more. But I'm not totally against just putting a stop right there and going long, just simply because it looks like it's been trending up since the open, basically. So that's a pretty strong trend. And a lot of times on these strong trends, if it's going to be a whole day of that, you may not get anything better than that. So you got to keep that in mind too. And then, of course, we get this reversal pattern right here. Notice what happens. We're moving down. You really go up twice here. Actually, you probably could have entered right here as well, but that's so sideways, and it's right at the EMA, and we've been trending up. There's a chance that you might, it really sets up as a long trap almost when it breaks above that right there, but I'm not going to go long right there with all that stacked up like that, especially when we came and we kind of went right through the EMA there. Notice how we're closing almost below the EMA. So you really could have argued for that one to be an entry right there, because technically on this chart, that's a failed second entry long. But I didn't like entering until you came back down here a little lower and pushed through the EMA and came back from the underside and definitely turned down instantly, had that big bearish bar. I like entering right there for sure. And that was the move of the day, really, right there, of the morning anyway. And then we back up here. Again, this is a pretty strong trend coming down, and this is only a first entry, plus we're not quite back to the EMA. So I think it's really risky, but look how bearish that is when we've had a big bearish move down. So you might have considered entering there, but I think you were better to wait when it tried to make the retest, and then you got this bearish bar. Just go short there, and notice how we get another move, and I think we have two measured legs. Measure that one, and then there's leg two, and you can see we went maybe a tick or so more. So that gives you a target to shoot at. And notice that we overshot the lower side of the channel as well on that. And then, of course, we're working up. You get a close outside. You pull back. It's tempting right there. We don't quite have a new high. We're not back to the trend line. So that's a good reason to wait, because if you'd have went short there, you'd have definitely got burned. Notice it comes back. Actually, if you did go short there, you probably would have wanted your stop one more tick higher, and you would have survived that. But I think you're better off, and then you actually get a second entry short right here. Notice that's a little bit lower than that swing. So that's a first entry, and then here comes your second entry. We're still not quite back to the trend line, but we overshot it here, so that tells you coming soon you're probably going to get a break. Either that or you're going to come up short. And so that's a double test of this high, so I felt pretty good about going short here by this point. Again, it's right into these lows, so you got to be a little bit careful. But really, when it turned down right here, when it broke below this bar, you could have gone short right there. But I don't have any problem with you going short on that bar, as bearish as it is. And then, of course, you bounce again. And this is just a repeat pattern. I mean, it is almost the exact same thing. You make a new low, first entry, and you get a second entry. And you could have easily gotten burned here. That's a second entry short. We did get a break and a new high, but we are outside the trend line. So I'm probably going to try to wait on a lower high or a trap or something. And we actually notice all those matching highs. Then we ticked one tick higher and turned. You got that big bearish bar. I still would probably wait on this to break lower and drop a limit order um, because it's starting to look like congestion there. And really, this is borderline being green. Once it started stacking up, I definitely wouldn't have gone short it over here. But if you put this to the far right side, you can see that now it looks pretty good right there because we did get a new high. We got that one tick higher than all those matching highs right there. And that's a fairly bearish bar, so you could see why I liked that at the time. Once this next one, where'd it go? All right, that's what we were talking about. Now, once you see those next couple, now it doesn't look so good. And you can definitely tell there's congestion there. So I probably wouldn't, after that one, I wouldn't have taken one. And then, of course, notice that's a new high. You pull back first entry long, pull back second entry long. We've got a break in a new low now. So you only want to go short on a trap or something, and you actually got it right there, your reversal pattern, your trap, and a big bearish bar. Just go short right there. Another quick, easy move. And then you get now you've got a break outside. You got two legs down. You can see that. I mean, this looks very similar to yesterday. There's your two legs down, two perfect measured legs. You can see that. To the tick. And then look what happens. Shoots right through the EMA, pulls back again. And this is actually your failed second entry short is right here, but that's still all part of that move. So this probably is going to trap some people when it pulls back right here. And so that's your confirmation of your trend line. Nice bullish reversal bar. Go long there. And you might have considered going short there. If you did, it worked. But after that break and two legs down, I'm starting to think long here, so I'm just looking for a reason. But I should mark that one, I'm guessing. If you did want to take that one, it fits the rules. You had a shorter term trend line right here, too, that I don't have on here. And you can see we did get a break there and a move to a new high. So that's another reason to consider that one. So I was probably trying to get ahead of the market by thinking long, but I was right in the end. But that just goes to show you you just got to follow the price action, and you can't be trying to guess ahead. So because that was a nice trade, and I would have missed out on it thinking and doing what I just talked about. So and it is another test of that level. Notice that there's a lot of resistance right across there too. We've tested it 1, 2, 3, 4, 5, 6 times. And then we made a little lower high there in a bearish bar. Your stop does have to go above, let me make this bigger, the two matching highs, but your entry would be one tick below that. So, and of course, that gets you into the noon hour, and you want to be flat. And of course, the news came out, and this wasn't real volatile. There's a little volatility there, but it's not huge. But if you probably would have been thinking long here. It's probably what I would have done. And you would have got stuck until the news came out, and you would have got burned. And so you got to be real careful about that. And then, of course, we make a new high here. You get the close outside, we make a new high, and that's pretty much you measure that leg, and then this is pretty much a measured leg. You get to move down, first entry long, we shoot right through the MA, pull back, there's your trap, and big bearish bar, so you could go short right there. Still a little bit of volatility here, but it wasn't moving that fast by now, so I don't have any problem going short there. And that took you a nice scalp down into the 2 o'clock hour, and then it bounced again. You wouldn't have got any big runners or anything. You probably would have had a runner here. You probably would have had one here. And I don't know if you would have, no, you probably wouldn't have had one there. It was right here. You would have had one. So you would have had a couple of runners today that would have got you some points. And this was a pretty straightforward day. I mean, this is real basic price action here. The break, the two legs down, the reversal. And you would have been flat by here. You should have been, and so you wouldn't. Even though this looks a little crazy and a little awkward, you shouldn't be trading in there anyway. And then this was pretty straightforward coming back down. So there it is. Not a hard day really. This reversal up here might have, but when you see that reversal pattern, when you get something that negative and that many confirmation of your trend line and that little trap right there, you got to go short. So um, that's what I tell people. Don't, when you're looking for a reversal, just wait until you get a confirmed trend line in the other direction. So that would have meant taking that one off the board. But once you get this one, it's obvious. Hey, we're below the EMA, and any attempt to go higher is getting thwarted quick. You better just change gears. You may not always get a retest of the high. That's what happens to a lot of people. They get caught up. You want to follow the rules, but you can't be so rigid in the rules that you lock yourself out of trades. When you got the price, nothing is written in stone in trading. There are no 100% rules. Our rules will work 90% of the time at least, and that's all you need. So, but you can't lock yourself into them. If you're not sure, don't do anything. But you should recognize, if you've had any experience for any period of time, you should recognize that's a reversal right there, and don't argue with it. Just go with it. You may have been thinking long here, but you wouldn't want to go long with all those bars stacked up below that trend line. No reason to go long there at all, even though you're thinking retest of this high. And you see what happens by ignoring the trend line, ignoring the rules. You go long because you're thinking retest, and you just get trapped. And so by sitting still and not doing anything and saying, hey, I want to make sure it's clear before I might miss a good trade. But by sitting idle and not doing anything, you can catch that trap and look at that move. If you caught that move, you could ride this all the way down, or at least until there's a break of the trend line. And that's two huge legs down, quick, went pretty fast. So keep that in mind. Sometimes the best trade is no trade. If you don't know, if you're not 100% sure what prices are doing and where they're headed next, don't do anything. I mean, you'll never be 100% sure. But if it's not in that 90 percentile range that you think, I'm 90% sure that I don't, or I don't know what's going to happen here. We may go higher, but I don't know, because look, we got a trend line coming here. Even though I'm expecting a retest of this high, I don't know that it's coming, so I'm definitely not going long. And then you're sitting there idle, and you can take the trap because it's obvious that's a trap. If it's not obvious, then you're just not there yet. You got a lot of work to do. You need more experience or whatever. So, but I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.